Alrighty, welcome traders. It is Monday, September 9th, 2024. Got the red Rally Tiger Woods shirt on today for Monday, and red shirt, green day. So all good today in the accounts, in the markets, and let's get into it. We got lots of stuff to share for you. So I'm going to go through some different market profile stuff with you today. We did some of this with members. I'm going to do it here just to show you what I'm thinking, what I'm trading here. Hopefully it'll benefit you, or at least give you some additional insights. I want to take a look at where I think the markets may be going. So we'll share that with you first for a little bit. I'm going to share a little bit about what I'm trading. We'll take a look at the account today, and if there's any time left, we'll maybe take a look at some other opportunities that are out there. So let me go ahead and share. I'm going to jump in. Today we're going to use some of the TradingView charts, and mainly because I can do a little bit more with them than I can do with toss charts. And I set some things up here that I think you might be really interested in. So let's take a look. Let's see what's going on out there. I'm going to switch screens for you here so we can take a look at it. So lots of great stuff. Stick with me here. We'll try to keep it short today. We'll see if that actually happens or not. Let me get myself off the screen so you can see what's going on overall here. So let's take a look at today and see how the markets did on the day today. So ES itself up 62 points on the session, 1.16% up. I know there's a lot of junk on this screen, so bear with me. It'll make a little more sense. I typically don't leave fib numbers up here too much, but you know, after the pullback in the beginning of August, markets have rallied back up, got into this consolidation zone. Just going to take this off. I didn't mean to do that. Let's see if I can undo real quick here. I want to take this off if I can. No, I can't do it without really causing a problem. Oh well, we'll fix that later. But the market's got into this consolidation area here, and stayed pretty balanced for quite a while. So it stayed in balance, stayed in this range, traded sideways, just stayed in balance. This nice consolidation move after the bounce, which I think is really healthy for the market. We didn't just V bounce and then gave it all back or something. We just started to digest that drop and then just balanced out. Then we started to fall a little bit later last week. I know I have some different lines on here for anchor VWAPs and so forth. I'm going to ignore those for today. But what I want to show you is the fib levels. So from this August 5th low all the way up to really the highs here on August 26th on this particular candle, or just in any of these in general here, the 50% fib level was right in here, about 53.94 or so. And that's pretty much exactly what we hit for the low on Friday. It was 53.94. So we hit the 50% fib level exactly on Friday, and then today we bounced off of it, moving higher. Now, is this bounce going to stay? We don't know. I'm going to give you some different insights in what I'm thinking and how I'm handling my accounts right now with some of this info that we see. But you can also see down here that the 618 fib is sitting here about 53.30, which is also the pivot level from back here that we had, and was also the open back here. So it's a pretty good, strong level at 53.30. So I do like that level. Does that mean that we aren't going to go below it or anything? I have no idea. And right now, any bounce here, I'm very suspect of the bounce. But it's a bounce nonetheless off the 50. Good stuff on ES today. So let's get into some of the other things that I'm seeing out there. And one of my favorite indicators is the put-call ratio. So I like the put-call ratio. You know, again, used in conjunction with other things, it gives you a sense of what direction the markets may be moving overall. So if we take a look at this put-call ratio here, usually when the put-call ratio, the 10-day moving average, and I did get this idea from John Carter many years ago, and I do follow it because I think it's been helpful. As the put-call ratio, 10-day moving average, is falling, okay, overall, look at the trend line here, the markets are typically rising. So as put-call ratio 10-day moving average falls over time, again, you got to take some of the noise of these individual daily moves out. As this thing falls over time, markets typically climb over that same time. Then when you see the 10-day moving average starting to climb higher as a whole, the markets are typically selling off like they did here in April through to the beginning of May. Okay. Then once we got back up, we saw them tip over and start to head down lower. Okay. And as the put call ratio just keeps heading lower and lower and lower, the markets just drift higher and higher and higher and higher and higher. And then eventually in here, we flipped again at an oversold level. And I used the 0.7 and the 1 as my two areas that I focus on for this index. So this is kind of an overbought, oversold type of a level. When that 10-day moving average gets below here, it's getting oversold. And here's where it reversed. And if you remember back on, I believe it was June 16th, something along those lines. Anyway, I kind of warned that, or July 16th, I mean, I kind of warned that I think we were getting oversold. I put out a video on, is the market, going to sell off here? Is the market sell off coming? Well, that exactly happened here. So we did flip, started heading higher. The 10-day from this oversold level started heading higher, and the market sold off. And we dropped from about 56.86 all the way down to about 5,100 during that time period. Then we started to roll over again, okay, and started watching the 10-day moving average heading lower. And this was really, sparked somewhere in the, the middle of August, like about the 14th or so of August, where we started heading lower on the put call, and the markets just started heading higher. Okay? And that really was at August 5th. That was the low point there. So we were selling off. I felt we were selling off. We just didn't do a great job of prepping ourselves for it, but we did call it, and we'll pay a little bit more attention in the future. So now we're moving back higher, and now we've seemed to have reversed, and now the 10-day is moving higher again, which is bearish. So as long as this 10-day continues to edge its way higher, with some, the markets I think are going to struggle a bit here, and we've got a bearish PSAR here. So I think overall we're seeing some bearishness in the market. So we're just going to be careful, and this makes me still cautious. Okay, as the 10-day moving average on the put call is heading higher, the markets are heading lower in a bearish PSAR signal. That's bearish to me overall. I think just caution is warranted. Are we going to go too far down? Well, you can see that every time the markets have sold off, it really, during this whole uptrend rally, it's really not been a gigantic sell-off. It's just been an opportunity to get back in and move higher. Is this another one? Are we going to see more of this? We'll see. Another thing I wanted to take a look at here was the inversion of the yield curve. Well, we know when the 10-year and the 2-year invert, it means that the interest rates on the 2-year Treasury is higher than the 10-year bond. Okay, so when the 2-year Treasury bond is higher yield-wise than the 10-year, okay, it's unusual, and it's we call it the inversion of the yield curve. Well, typically, okay, investors want higher yield for longer term bonds, like the 10-year, the 20-year, the 30-year, because they're taking more risk. So on the inversion, if the 2-year is getting a better interest rate than the 10-year, that's not exactly what investors are looking for. And typically it's a recession indicator. And what I indicated on here, so this is the 10-year and the 2-year, but every time we invert down here, like we did back in 1988 in November, okay, within, I don't know, 6 months to 18 months or so, typically a recession follows. And we had a recession in 1990 after this inversion. Okay. Then we inverted here again, okay, in 2000, and we had a recession in 2001. Then we inverted here again in January of 06. and we had a recession in 2007, 2009. Then we inverted briefly here in 2019. And then we were followed by the 2020 recession. That was really fueled by COVID, but still the same timing. Now, we did invert here, and I didn't really mark it on here exactly, but if you're really looking at this, if I can put, this is where we inverted. Okay, back in here. So the question is, if we inverted back here in March of 22, we have not seen a recession since then. But if we take a little bit longer look here, so there has not been a recession triggered necessarily by this inversion back here in 22, but it can take a year or so to mature, and we're just a little past 2 years out of it. But every time this happens, a recession typically does follow. This has been the longest period in here, right, where we have been inverted and we have not really seen a recession or anything. But this is the longest period dating back, to the beginning of this chart in 1988 or so, 87. We've never seen anything stay inverted this long. So we're setting a record here, and now we're finally uninverting here. Okay, which means now we're starting to get we're starting to get the back end of that yield curve. That 10-year is starting to outdo the shorter term yield curve. So we're uninverting here on this move. Now, what does this mean? Okay, are we heading into a recession? That has yet to be seen. I'm not necessarily saying we are. I would not be shocked. Okay, so I'm not going to be shocked that we hit a recession next year. On this, I don't know if the Fed is potentially behind the curve, no pun intended, on getting rate cuts here, but did they do too much damage to the economy, and are they going to send us into a recession? Could be a mild one. We could even be in the recession right now, and we really just don't know about it yet. So kind of have this question marks here, like, are we really, in a recession or starting one in here? But we're uninverting. So anyway, the thing I wanted to bring up here, which again supports some of the things I'm looking at here, is when longer term bonds, okay, when the yield is rising on those longer term bonds, typically the bond itself is falling, but longer term bonds tend to rise in price after a yield curve inversion. So after the yield curve inverts, okay, bond prices tend to rise. This is typically because economic conditions worsen. There's more expectations of a recession. There's some flight to safety here. So as the demand for long-term bonds is going to drive their prices up, and yields should fall. So we're expecting now that overall yields are going to fall, which makes sense because the Fed's supposedly going to be cutting rates in a couple weeks, and then they're going to keep cutting. 7 rates are coming our way. Well, so the Fed's going to do its job, okay, because they're going to cut rates, which is going to drive up prices for bonds. This is why I've been so bullish on bond prices. Okay? This is why I've been in TLT and bond futures, all of those, because as we've been inverted here and as we are coming out of this, okay, we're really starting to push things higher. Right, so I just wanted to point this out for you, but I think that this was the low. We're moving our way higher on TLT. I like where we are. In fact, we can jump into kind of our daily, weekly here and just look at TLT itself. And again, I like futures on bonds better, but as you're looking at these charts, we've been just climbing. And I think once you go inverted, okay, bonds typically will rise after a yield curve inversion. And I really like that. I feel bond yields are going to fall on the longer time frames as well. And flight to safety, Rate cuts are coming, steepening of the yield curve. You're going to start to see that yield curve, I think, even steepen more because I think short-term bond rates are going to fall faster than long-term, which means you're going to see a steepening of that curve. Even though the farther end of the curve now it's uninverting, it doesn't mean that rates on the far end are rapidly rising. It just means the rates on the short end are falling faster. So I'm, again, very bullish on bonds. If we look at bond futures as well, I'm heavy into this. I really want to be in. I've got TLT shares. I've got TMF shares. I've got ZB, I've got ZN trade. We just had a ZN trade come off for a winner today. I can't be more bullish on bonds than anything else out there. I'm suspect of the market. We just talked about that, but bonds, I'm pretty confident that bonds are going to at least hold their value or inch up here over the next 6-7 months or so. And if things get turbulent, I think a little flight to safety could really push bond prices up. So I want to be in bonds right now. Anyway, it's hopefully a lot of stuff for you to digest, but I want you to understand where I'm coming from, where my trades are right now. All right, so and here you're seeing the ZB, which is the 30-year, breaking out on the daily here, finally breaking out. ZN, which is the 10-year note, had been in this consolidation area. Really, this was fairly valued in this fair value zone. Okay, it was in value, and now it broke out last week, and it really is moving pretty quickly. So we're in both. These are coming off quick. We just closed a trade today on ZN. We were only in that particular trade for, I believe, like 27 days on a 101 DTE type trade. So 27 days. So not too bad to make that money. Great opportunities here. All right. So there you go on bonds. I've already covered ES and what I think could be happening here. Great bounce today, super for our portfolio. I'm not sold. Okay, the volume was not great today. So big bounce on lighter volume than the last week or so was. So not great volume overall today on the day. We'll see what happens. So let's take a look at oil. All right, oil been a bit of a downtrend here on the weekly. So for a couple of months now, oil has just been dropping. But the one thing, and I pointed this out today to the members, was look at this volume. Okay, so starting last week on this volume was Monday, Tuesday, Wednesday, Thursday, Friday, all down days, but the volume just stair-stepped its way down. Now today, I don't know if it's really a somewhat of a hammer candle on this today. Still a big bearish engulfing here. It still rules the day. We'll see if we get a continued movement down. Not a big volume reversal day, but an inside day today. So pretty much an inside day. And again, you can call this maybe a bit of a bullish harami candle as well. So if we're looking at that, big bear candle, and then the second candle being a bull candle, but it has a smaller body compared to this. So this is also a bullish sign. Okay. I would have liked to see more volume. Let's see if we get that, but I like this. So bullish harami, okay, potentially a bullish reversal. We're very close to oversold levels. MACD trying to reverse here. RSI trying to pull up from the lows. I like where oil is here. I'm not going to go crazy because this is, to me, catching a bit of a falling knife, but we are in oil. And I like my oil trades. So we're sitting right now on 2 trades in oil. We have a 112 trade. Yes, I'm still trading 112s, folks. So don't write me off undead on 112s. Still trading them. I'm trading all 11X type stuff still. 111s, 112s, doesn't matter. Okay, we trade them with some decent hedging in some of the areas. Okay, and in other areas, we're just going to keep trading the 112s out there and just being smart about it. But we've got a 112 on oil, which is up 24% in 32 days. And then we also put on a naked put here on Friday, that naked puts up now 18% in one day. So I like where we are on oil and crude oil futures. I'm not going to go hog wild. We're not going to put one on every 3 days or something here and get 20 of these on. But if we continue to show some signs of improvement, I really like potentially writing some put credit spreads underneath this. A 1-1-2 trade would be fine. And I think put credit spreads, nice defined risk, easy on your BP trade here at the bottoms. Is this the bottom? I don't know, but we're going to see if things continue to play out. All right, quickly look at gold here too. Gold is also in just this value range. It's just really making a strong value range on volume here. It's going to either be a big springboard to jump off of, or if we fall, it's going to provide a big resistance level potentially. But gold, it's still bullish. 21 above the 50. Okay, on the weekly. I mean, why not? You're still sitting in overbought territory. So I would like to see this thing settle down. Okay, I'm not going to get long until I see some pullback or just more continued sideways and see the RSI starting to chill out a bit on gold. And then we're also in a copper trade of this descending wedge, a breakout to the side of this descending wedge. I like where we are. These two little lines down here are a put credit spread that I have on. Nice big, really almost bullish engulfing candle today. So I think that's a pretty solid looking move today. Volume was a tad light, wasn't great. So we'll see if we get some more follow through. We're trying to get back to the 21 EMA here on the daily, but and the 50 EMA here, and we're holding in between the 50 and the 200. So right now, copper is in a bit of a quandary. It's just this sideways consolidation zone that we're in. I feel that was good enough to put on a put credit spread, defined risk trade. So we'll see how that plays out. All right, last thing, I'm going to cover two more. Silver. So silver has been just in this descending. I'm going to take this off because this can be a little confusing. Silver is just in this descending, really, channel. We can draw the bottom of this channel too. So looking at this silver channel, okay, top of the channel, bottom of the channel, just keeps working its way up and down. But it's also just hanging out at this 21 EMA on the weekly, and it's not too far from the 21 and the 50 on the daily. Yes, there's some weakness here, but I think, with the increased volatility on silver, we got an IVR of 47. I think this sets up well for a strangle. 51 on the RSI and on the weekly, and 48 on the daily. I think it sets up really well. So we're looking at adding a strangle here. So that's one of my new trades for today was strangle on silver. The other trade from today is on the Aussie dollar. And the Aussie dollar has been kind of in this sideways trading range. And we were higher highs, higher lows, and then we fell out, V-shaped recovery, gave a bunch of that back, came right back to the 21, and that's where we're sitting here with an RSI dead on the 50. We're right at the 21 day. We're right at the 50 and 21 here on the daily. RSI is at 43, so it's not really moving strongly one way or the other right now. I think overall, you've got a bullish PSAR on the weekly, bearish on the daily. It doesn't know what it wants to be. So as long as that's the case, I want to keep strangling that. So this is my other trade for today. So those are my two trades I'm trying to get filled on. Did not get filled during regular market hours. We'll see. If not, we'll go back at it again tomorrow. All right, so there's where we are on those trades. Let's take a quick look at the account, and then we'll wrap up with you guys as well. So on the account today, we ended delta 377, so 0.11, so good delta there, not too strong, not too weak, just just nice. Theta sitting at 902, so good theta, 0.26. A fraction light considering where volatility is, but I'm okay with that. Big gainer today, net lick 348. Pretty much haven't gone anywhere. 348, 675. In fact, it's 348, 981 right now. I recorded this just a little bit ago. So 348, 981 is actually 349091 right now. So it keeps moving higher. But we're really back to where we were 4 weeks ago. So we haven't really moved our net lick for 4 weeks, which I'm pretty doggone happy about. So the market, okay, if we're looking at ES, the market's had a couple not great weeks. I mean, last week was just a horrendous week for the market, and erased the 2 previous weeks for it. So market's only fractionally higher, or actually market's lower than it was 4 weeks ago, but we are sitting exactly where we were, okay, 4 weeks ago. So I like where we are. BP usage hanging in there at 48% when you take bill away. And what I also like is my Vega is the lowest it's been probably in quite some time, 4612 negative Vega. So it's really about that 4-to-1 ratio, which is perfectly ideal for me. 5-to-1's where I would like to be. So I like where we are. Overall, not too shabby. I like where we are. We lost $20 today. We had 1 winner, 1 loser. The loser was we took a hedge off that we put on Friday that negated a winner on bonds. But hey, you gotta do what you gotta do. So I don't mind hedging if I feel it's warranted out there. All right, so let's just jump back in. We'll wrap up with you today. So overall, we're nowhere in 4 weeks, but the market's down, but we are dead on where we want to be. I think we're set up well. I think we got great Vega. We got 2 new trades in the hopper on silver and the Aussie dollar, trying to get those strangles on. We did take profits today on a put credit spread. We're still cranking away. I talked to everybody today too, just let them know my trade plan is largely the same, hasn't changed. Okay, what we did was we lightened up on some of the naked puts and we added a bit of a volatility hedge. That's it. Okay, everything else is exactly the same. Haven't really reversed our positions on anything that we're doing. Okay, we're going to go with what got us there. We're just going to do it a little bit safer here. So we're going to bring that Vega down a tad, and then we're going to put a volatility hedge into play. Other than that, we're going to keep trading. We're going to keep pushing. We're going to keep trading. We're going to keep making money. Feel good about the positions that we have set up right now, and I'm pretty happy with where we are. So not changing any other philosophies. No, I'm not putting on 90 different hedges. I'm trying a couple out. We'll see which ones I'm going to stick with, but for the most part, we're only adding 1 hedge, and that's a volatility hedge. We are not scrapping the 1-1x trades. We're still doing plenty of 1-1-2s. We've got a few more 1-1-1s than we had before, but we modified the setup of those, I think, to make us a little bit more valuable, and not changing any of the strategies. We're not going to start rolling and ignoring stops and all kinds of crazy stuff. Okay, for the most part, and I hate rolling. Okay, we're going to stop out and take our medicine if we lose. Okay, we're going to still take our profits early when we can, and we'll keep trading, making money. If this was helpful to you, click the like button down below. I hope you like what you saw here. If you're not a subscriber to the channel, subscribe. I'm going to show you my journey. I keep showing you every single day, up, down, sideways, doesn't matter. I'm one of the only people on the internet sharing their trades with you. Okay. Everybody else, especially most of you that want to send little snippy comments and stuff here, I don't see you posting any of your trades live anywhere for people to evaluate and make comments on. I do it to hold myself accountable. I also do it that hopefully in reality, some of this will help you either avoid problems that I've had or make some money that I've made as well. And we've made a bunch of money over the years. We'll continue to do so. So I'm going to continue to share my journey with you. Enjoy the show. If you want to watch it go up, watch it go down, it's all good. Okay. But maybe you get something out of it that helps you trade. Have a great evening, folks. Stay safe, take care, and we'll see you in trading tomorrow. Bye-bye.